What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, we're going to go over a few different charts, and I'm also going to recap my trades that I took on Friday for you. Okay. Now, I got to forewarn you. Okay. My trading on Friday, to some of you, it's going to be pretty weird. All right. I'll tell you, I fumbled a little bit on Friday. Okay. I still took some good trades. I still made money. All right. But I missed the trades. You know what I'm saying? I missed the big dog trades, that everybody likes to see. But I'm going to show you, how powerful just taking 20 pips out of the market is, or taking 50 pips out of the market. If you can master taking 20 pips, if you can master taking 50 pips out of the market, you are well on your way to establishing a successful trading business. I've been harping on this for the last week or so. I'm really trying to drive this point home to you guys. All right. A lot of you are going to find yourself losing trades, getting stopped out unnecessarily, right? Or giving back a lot of profit because you're aiming for the fences every time you step up to bat. Okay. And that quote truly resonates with me. Okay. Base hits win games. All right. Do not condition yourself to aim for 300 pips on a regular basis. Okay. If you think that you're going to get in here and hit 300 pip trades every day, you got another thing coming. All right. I learned this the hard way. And that's the only reason why I'm talking to you guys about it. All right. I believe in a little bit of tough love. I care about your trading. All right. I want you to succeed. All right. Understand the power of simple 20 pips, a simple 50 pips. Okay. This can get you to where you want to be in your trading. All right. Now, let's jump into the charts. So here we're looking at the DJ 30 on a 15-minute chart just to get a look at the entire week. All right. You can see we have a very clear high and low put in place Monday and Tuesday. Okay. And I've painted on our master pattern of peak formation, higher highs or higher lows. In this case, higher highs. Okay. Now, again, we're just using this template, sort of like a visual aid to let us know when the market is shifting from backside to front side or front side to backside, or when we're shifting from bearish to bullish or bullish to bearish. All right. So it's a very simple process. Okay. And to just keep it as simple as possible, if the market is putting in lower lows, all right, if the market is moving lower, if we are in a downtrend, okay, we're looking for pump and dump scenarios in the session that we're trading. And if we're putting in higher highs or the market is trending bullish, we are looking for dump and pump trades on our way up in the session that we are trading. All right. So you can see here, I have marked off our peak formation high, peak formation low, day one, day two, higher highs also on day two, day three, blast through those. Okay. A nice dump and pump in the session. All right. Now, when we're trading on Wednesday, okay, Wednesday is automatically day three of the weekly day count. Okay. So it comes down to our daily process. Okay. And obviously, timings, levels, behavior, price. That's what it's all about. All right. Now, check it out. Wednesday, we break out of Monday's high of the week level. All right. And you can see here that Thursday pulls back to that level, starts going up. Okay. And then Friday pulls back to that high of the week level, right? For the pump. So here is Friday's chart. Okay. This is something that you will get used to seeing if you are trading US indexes, okay? You will get used to seeing a narrow range of coiling sideways through Tokyo, through London, and then a spike in one direction as we enter the New York session timing window, okay, for a trade in the opposite direction of that spike. So you can see here, right? We get here, we dump down back to that Monday's high of the week level, right? And then we explode in the opposite direction. This spike downwards before the 9:30 open, right? This is a clue for us when they're dumping down before the session open at 9:30, all right? That's giving us a clue. This dump takes out the low of the current day, all right? And that's the inducement. That's getting traders to short this market. They're like, "Oh my gosh, dude, we're selling off. Here comes the crash that everyone's been waiting on," right? They start selling the market when we break the low of the day, and then it reverses on them. Immediately, they're feeling maximum pain. Their accounts getting drained. All of that good stuff. Okay, smart money is making the money, taking it right out of the accounts. Okay, so here, if we zoom in, we can see right here, right around 9:30, we get this nice pin hammer right here for the entry. We've done went below the EMA, crossed back above the EMA, pull back into the EMA for the entry and the trade long. All right. And that's not what happened for me, but I'm going to show you in a minute. Okay. You see that trade? This little tiny trade that I took. Okay. That's 50 pips. That's an easy 50 pips on the DJ30, all right? And there are various reasons why I took this trade, okay? I had my daughter was with me this morning, so I kind of, I was a little busy. I could not give 100% of my attention to the charts, all right? But that didn't matter to me, all right? I already saw the price action. I already saw the behavior of price, how we dumped back down to that previous high of week level that was put in place on Monday, okay, and then started putting in higher highs. Now, if we're putting in higher highs, I'm looking for a dump and pump. And you can see that the whole way up, right, we got a dump, pump, a dump, pump, dump, pump, dump, pump, the whole way up, okay? That's what we're getting. Dump and pump. Okay, it's just as simple as that. So you can see that for my entry, hold on, let me get my other headphone here. All right, so you can see that on my entry here, let's zoom in. Okay, we are still putting in higher highs. Okay, then this market dumps back down, coils sideways, and I waited for us to break that high. I entered this market. Okay, a 1 bar stop with a 50 pip target, and you can see I hit those 50 pips in 3.5 minutes. Right, making money. 50 pips is powerful. You don't think you can do that? You don't think you can master taking 50 pips out of the market when this is the type of moves we're having on the DJ30? Okay. And how many opportunities was there to take 50 pips out of this market? Okay. 50 pips, 100 pips, 50 pips, 50 pips. Okay. There was a lot of opportunities to get into this market. All right. And for me, this was when I could get into the market. Here we're looking at Bitcoin on a 15-minute chart. All right. And you can see here, right? Tokyo puts in our initial high and low range of the day. In the gap time, we put in a lower low. We pump up going into the London session, okay? Then dump down, again, putting in lower lows. So what that is telling me, right, if we're still putting in lower lows, as Stacy says, that means that the low of the day has not been put in place yet, okay? We are still potentially going lower, right? And we continue to put in lower lows as we enter the New York timing window, right? Right at 9:30, we get this lower low put in place and we start to pump up into our 10 o'clock timing window. And again, this is a 15-minute chart. So once we get up to the top there, we have 30, 45 minutes of a consolidation, a sideways coil before we dump. Okay. And you can see we pump up through that EMA, coil sideways, and then dump back through that EMA. Okay. You can only really trade this market in one direction when you see what's going on, right? Now, here is the 1 o'clock chart, just so we can take a closer look at the behavior of price for this potential trade. You know what I'm saying? So, again, we have this lower low put in place right here at 9:30, letting us know that the low of the day may not be locked in place yet. All right. And you can see this could be kind of tricky once we get this huge pump up. You might think that we are locking in the low of the day, we're reversing and we're going higher. Okay. And you could have squeezed out a really nice trade right here. Okay. But this is one of those scenarios where patience pays. Okay. So we pump up into that 10 o'clock window, we coil sideways, we have a more aggressive entry right here as we break that death line, as Stacy calls it. Okay, we break the death line, we pull back into that EMA, get a nice engulfing candle here on the 1 minute, and you could have taken your initial entry into this market there. Okay, or if you wanted to play it a little more safe, you wanted a little more confirmation because of this, big pump up, you think maybe we're locking in the low of the day, so you want to be a little more safe. When we dump down, we pump up into that fourth hour, okay? Back into that EMA, coil sideways for a brief moment, and then start to fall again, okay? So you could have gotten a nice fourth hour entry, right? Now, when that timing window is over, it's over and we want to move on, get off of the charts, right? But if you take a fourth hour entry around 11 o'clock, you're already in the trade and you let the trade run outside of the timing window, that is okay. But we don't want to be chasing this market, all right? We don't want to break our rules to try to secure a trade. We do not need to do that. And the reason why is we know that we have a working system. We need to follow the rules of our strategy. The strategy is there to protect you. Okay. Now, here's the gold chart, which, in my opinion, was the best chart this week. Okay. You can see Monday and Tuesday give us a clearly defined high and low range of the week. Wednesday, Thursday, Friday, all of that price action is taking place inside of Monday and Tuesday's high and low range of the week. Okay. Now, I have marked off day one, day two, day three. On the back side of the week being Wednesday, Thursday, Friday, okay? According to the weekly day count, Wednesday and Friday are automatically day threes, okay? Now, I'm using again this simple master pattern of peak formation, higher highs, all right? So you can see we have our peak formation high, peak formation low, day one, day two, higher highs on the inside, right? Then this market dumps down into Asia. Nice W pattern there. Really nice Tokyo session opportunity there. All right. But you can see that we are just continuing to put in higher highs. While that's going on, we are looking for dump and pump in the session that we are trading. All right. But you can see Wednesday's high gets taken out right here on Friday. Friday trades back up into the high of the week level before failing and dumping down quite aggressively here back to the low of the day area. All right. Here's just a closer look at this, just showcasing how we break through Wednesday's high back into the high of the week area before we fall. All right. However, these are the trades that I took on gold. Again, I couldn't just be there, at the charts. I had other things going on, but this is as simple as it can be. And guess what, guys? 50 pips, 50 pips. Okay? Those are 50 pip trades. You're trying to tell me you can't master taking 50 pips out of the market, but you can master taking 250 pips every day? Okay? Make it make sense to me. All right? You can see here we are putting in higher highs. That means I'm looking for a dump and pump type of trade. And you can see we get the dump and pump, 930, dump and pump, dump and pump. Okay. And that's what's going on here. We're just getting these dump and pump opportunities. Right. And that's exactly what I took here. Okay. This market, we dumped back down through that EMA. Okay. We actually did here and we're coiling sideways into the EMA. Get the nice engulfing candle. I took this entry right when we broke that, the bearish candle right there before that. Right. I was aiming for these highs, 50 pips away. Okay. Easy trade, easy trade. And again, here, you can see we dump again, pump. This market dumps back into that EMA. Nice pin was delivered right here. Right. And I just got into this trade, put my stop at the bottom of that. Okay. Put in a 50 pip target and knocked it out. All right. We're looking at a 1 minute chart. So you can see here we got 1, 2, 3, 4, 5, 6, 7 minutes, maybe 50 pips here. Right. 1, 2, 3, 4, 5, 6 minutes, 50 pips. All right. So all in all on Friday, taking 25 or 50 pip trades. Actually, they were all 50 pip trades. I took 150 pips out of the market. All right. It's not some crazy huge trade, but it gets the job done. Okay. And I feel safe and secure doing this. We all trade our own way. I have my own sort of way to trade that exists within Stacy's system. Okay. And that's how I'm taking these trades. That's why I'm taking these trades. I know what I'm looking for. I know that if I'm making, or if we're making higher highs, I'm looking for dump and pump opportunities to enter this market and make some money. Okay. Here we're looking at oil. Again, we have a peak formation high, peak formation low, Monday and Tuesday. Right. Day one, day two, day three with the higher highs. Okay. So now when I see this, all right, I see this when I come to the charts on Thursday. Because we have that higher high in place, I know already that I'm expecting a dump and pump, okay, to continue putting in higher highs, all right, which is exactly what we get on Thursday. If you're patient and you know what you're looking for, this can become a pursuit of pleasure. Okay. Day two on the backside of the week, you can see this market is grinding around, right? But when we get to the New York session, right before that 9:30 open, this market dumps down. It takes out, these levels, trading back into the low of the London session from the previous day. All right. And then pumping up aggressively. Okay. And what do? We go right, take out those higher highs, take out the high of the week. All right. We're still putting in higher highs. So when we come to this chart on Friday, we know we are still looking for dump and pump opportunities. Okay. And this is Friday's session. You can see this market dumps down. You see that red line right there, right? Where are we? Let's double check. All right. You can see these red lines right here. What I'm trying to illustrate to you with that is, if we look here, okay, before we get to the session, we have a high and we have a low. All right. So what I'm showing you is we're back into that low. We're working the low. Okay. So we dump, we take out the lows, or we work into the lows, coil sideways. You can see this higher high on the inside right here. And when we break that level, that's when I'm comfortable with entering a market, okay? And you can see we've also crossed over that EMA again. We are getting pins into that EMA, all right? And you could enter that market, take it long, comfortably, okay? Securely, all right? And here it is again. Here's a little close-up view of this, right? Here's our low. Here's our high. This is our most recent low and high range. And you can see going into that 9:30 timing window, we are working the low, right? Then we explode, right? You could take an easy entry right here when we break that higher high on the inside, right? So I hope that this video makes sense to you. I know we're looking at a lot. We're talking about a lot. It's almost 3 o'clock in the morning for me. Um, my daughter, she's kind of sick. She's been up coughing all night, waking herself up or whatever. So, I'm a little scatterbrained, but I hope that this made sense for you. I'm trying to keep these videos as simple as possible and just sort of showcase well-engineered charts for you, right? Now, even though on some of these markets, right? Even though I missed like this huge dump, right? I don't even think about it like that. Mentally, I don't even think about missing a trade. I did not miss a trade. I took two beautiful trades, okay? Excellent trades. Easy, okay? So by the time this big dump happens, right, I'm already gone, bro. I'm already enjoying my day and shit. While everybody else still sitting here stuck on the charts thinking that they got to nail 1,000 pips today. Okay? Same thing with the DJ trade. Right? And I mean, hey, congratulations to anybody who did get in, you know, closer to 9:30 here and take all of this. You probably got 200 pips out of it, 300 pips out of it. Congratulations, bro. You know what I'm saying? I'm still taking my 50 pips and getting the fuck on out of here. Excuse my language. You know what I mean? I'm just getting out of here, bro. I'm taking easy trades, 50 pips. Statistically, bro, you're going to be more consistent trying to take 50 pips a day than you are taking 150 pips a day, okay? If you have a normal target of 150 pips, it doesn't matter what market you're trading. There's a lot more opportunity for this market to turn against you and stop you out, especially if you're moving your stop to break even or you're trailing your stop, okay? It's a lot more likely that this market is going to turn around and stop you out. Whereas if you have a smaller target, 20 pips, 25 pips to 50 pips, right? I'm just saying mathematically, bro, it makes more sense. You're going to hit your take profit more often because you have a smaller take profit target. Okay? Does that make sense to you? And now, again, I'm trying to reiterate this to you over and over and over again, bro. Master taking 20 pips out of the market. Okay? We're talking 20 pips. If you're trading currency pairs, 20 pips is a very good trade on any currency pair. Okay? When we are on the indexes, or we're talking about gold, oil, silver, this sort of things, master taking 50 pips out of the market. Simple as that, bro. Master taking 50 pips out of the market. I'm just telling you, bro. I'm just telling you. There are some people, it depends on your account size, but you can build it up with 50 pips, bro. Okay? Especially if you're taking 3 trades a week, 50 pips, that's 150 pips a week. You are making money, bro. But there are people that have bigger accounts than others, all right? And I guarantee you, some of y'all traded a 300 pip trade, and someone who took this 50 pip trade made more money than you. Okay? So it doesn't really matter the size of the trade when it comes to making money. All right? It depends on if you can execute this consistently. If you can consistently take 50 pips out of the market, and you can do that more consistently than other people who are randomly hitting 300 pip trades, you get what I'm saying? You're going to be making more money in the long run. You're doing it in a safer way. You understand? That's part of risk management. Risk management, like I've told y'all before, is much deeper than just having a stop loss, okay? Risk management, you should embody risk management. Every single move that you make should have something to do with your risk management, okay? It's a lot deeper than what most people think, all right? Anyway, man, until next time, I hope you continue to free your mind.